upscale mode. Now, the startups, which are around 50,000 registered startups in India, out of which 9,300 around are in tech space. And there are only 24 unicorns in India out of this 50,000. No, we are in not in a real good shape. The startups are not in a real good shape, and most of the startups are in a survival mode rather than a upscale mode. Today, in this third session, we focus on startups in India from an investor as well as an entrepreneur perspectives. We have with us today Sri Seshadri Nathan, an alumni of IIMK EPGP 03 Kochi campus batch. Sri Seshadri is a chartered accountant and a chartered financial analyst from US. He is one of the few registered valuers with IBC cases from Kerala, and he's a member of Mumbai Angels. He lived and worked in US and Kuwait. Then he moved to Kochi, joining EY, looking after clients in Africa, Middle East, and India. He has authored books on valuation. He has published many research articles. He's closely associating with Rotary International and the past president of Tri-City Rotary Club. Sri Seshadri is the best person to talk to us on startups, because he's associating with startups as an advisor as well as an investor, and he has inputs from all around the world still now, because he's associating with the CFA charter in US also very actively. Before Sri Seshadri, welcome to this session.
Thank you, Roy.
Okay. So before handing over to Seshadri, let me set the agenda for today. Sri Seshadri will speak for 30-40 minutes. Then we can have QA session after that. It will be open for QA session. While he talks, you can type the QA in the chat sessions. Also, after the talk, please engage in discussions, and we welcome, we value and welcome your inputs from different sectors, because all of us represent different sectors, different geographies, and different perspectives. So once again, welcome, Seshadri, over to you.
Thank you, Roy. So for a brief while, I'll just turn the video on for the introduction part.
Please.
And then I will go on, turn off the video so that presentation will be clearer.
Okay, sure.
So I just have a brief presentation just to help me walk through the different ideas that I want to talk to you about today. So these are more in the nature of, checklist that rather than a typical presentation that you will see. So first, let me attempt to share the presentation here for a moment. Is it visible to you now?
Yes, Seshadri.
Okay. So first of all, thank you very much to Consoul Associates and IIMK Alumni Association for having me on this presentation. So it's a great pleasure to present a wide variety of businessmen and entrepreneurs and people from different sectors who are present here. So first, what is my kind of credential in talking about crisis? So there was a tech crash back in the 2000s, followed by 9/11. I was fortunate enough or unfortunate enough to be part of the tech sector at that time. I was finance analyst and finance manager for a large group with presence in technology, services, and manufacturing. So I've seen that crash, and I've experienced what came out of after the crash. And then we had the minor SARS crisis in 2003, which affected supply chains a lot, especially in the US and other parts of the developed world rather than India. But it was a smaller crisis, but it was also a learning experience, I would say. And then, of course, the big one, everyone is aware of, the last big one, that was the global financial crisis. And I was also fortunate to be part of the real estate industry at that time. So I somehow find myself in the middle of all these crashes to the sector that was most affected. So I've learned from, or I've had experience to learn from all of these. So that's what I want to share with you. So before we go in to the next part of the presentation, it talks about what is the likely future. So I just want to start with this favorite, caveat that this baseball player and coach Yogi Berra had. It's tough to make predictions, especially about the future. So with that caveat, let me start with what the future might look like for businesses. So we had the SARS coronavirus before, but that has been largely contained in the Guangdong province in China. So that is one of the paths that this virus could take eventually. But it's very late for that path, is what I personally feel, but that's just a personal opinion. The second one is the H1N1 virus, which still is around, but in a very mild form, which causes flu seasonally and takes a few lives of the unfortunate vulnerable people. But COVID has been a little bit different. It mutated fast. We have also seen reports of it migrating into a tiger and other animals. So it's mutating fast. So looks like the only opportunities to survive this is to develop immunity through herd immunity or vaccination eventually. So viruses don't just disappear, so they just mutate and are still around, is what the general conclusion from this. But the impact on business, whatever that path it might take, impact on business is all about uncertainty. It's not that it's not your typical risk that you see in bear market or demand fall, recession. It's not that kind of a scenario at all, because everyone is now uncertain about how things are likely to play out. In recession, it's very easy to say that demand will come up in another 1 year, 2 year, or whatever that time frame is, and things will be back to normal. So that's a different problem than to face an uncertain future. So that's what has been causing problems in all markets, including the equity markets and the financial markets. One sort of analogy I want to make is the great extinction event in the evolutionary process. The dinosaurs were huge animals. They ruled the earth 66 million years ago, and they went extinct after one of those large events that happened, including 3/4 of life form in that period of time. So the lesson from that is the smaller, better adapted survived. So one glimpse of that is that you can see around us. Look at the e-commerce giants around you, the Amazons and big baskets and all of them. They're offline. I mean, they can't do much. But your Kirana stores and the Petikada near you is thriving. They have more business now. Why is that? I mean, it's not about size differential that I want to make comparison in this particular case. It's all about the customer connectivity. They are more closer to the customer, able to do the last mile delivery. So that's why they are able to survive and thrive. That should be the mode that you should adopt as a businessman, as an entrepreneur at this time. It should be about surviving and then thinking about long term. And this is a great time to, go back to our IIMK Arjuna. So we have this statue of Arjuna in front of IIM Kozhikode. So I want to use that analogy to take you to what you should be doing in the next month or so, and especially for the next 1 week during this lockdown. So think about what Arjuna did during the 12-year Vanvas. He went out and gathered all, special weapons and whatnot. Did a tapas for, to bring Shiva and get all the advanced weaponry of that time. So that is what you should be doing as an entrepreneur as well. So this should be your time of going to do your tapas and think about how you will run your business in a much better fashion in the coming days. So there are cautionary notes there that I want to make, but we'll do that in the next slides. And most importantly, stay connected with these 5 groups that are important to you. One is your employees, second is your customers, third your suppliers, and coming to startups, your funders, and finally, don't forget your prospects. So either your prospect customer or prospect funder. So keep in touch with them. It doesn't need to be a business conversation, just saying hello and saying how you're doing and what kind of books you're reading or whatever that might be. But do keep in touch. This is a stage where you can build relationships. Everyone is in the same boat. So that is one advice that I want to start off with. Now on to the situation that we are facing. So we have, at this point of time, we should realize that cash is king. Earlier the saying was sales is vanity, profit is sanity, cash flow is reality. But now cash is king. So this especially applies to the SMEs and startups which had revenues and employees. So with that note, let me start on to the next segment, which is all about being cash the king of this scenario, what you should be doing. So the first element you should be looking at is clearly working capital. So that is your receivables. My suggestion is you look at these as right now there are 2 segments that most of the businesses would be serving. One is the essential service customers, which are running their businesses despite all this lockdown, and they have business. So their receivables should not be an issue. They don't really have an excuse. So talk to them whenever they are available. Find out what you can collect easily. The second is the non-essential services, which are completely under lockdown. They don't have any business. So there you take a different approach. And finally, within that category, there is this luxury and discretionary customers. Just forget about them for a while, because guaranteed international travel or real estate cases or customers, they are not going to be in a good shape in the coming few months. They should be the category you should think about negotiating, and still look for collections to be accelerated there. Finally, it's all about relationship management. You categorize your customers into your ABC, which are essential to you, which are which have been good to you, and B category should be customers which are somewhere in between. C should be the customers you probably want to not deal with in the future, if there is a category like that for you. So do that categorization and then do this relationship management. Finally, or in this segment, as well as for the for your suppliers, try to negotiate cash discounts with your customers for early payments. Accelerate your billing. Think about doing that when you get into the after the lockdown period. So the idea is that if you when I say accelerate billing, what I mean is that if you've been billing somebody for services or product ship for every on a monthly basis instead of or a periodic basis, try to cut that period down. So if you've been billing services on a monthly basis, try doing that on a bi-monthly basis. Negotiate those terms. So that is one approach that I can suggest there. And next, looking at inventory, the the idea is that if you have inventory in your hand, and there is not going to be demand for the product, try to sell whatever you can at whatever price that you find in the market. Don't think about um, losses. I think somebody's commenting that the PPT is not visible. Let me try and see if I can fix that.
Seshadri, you may have to share your screen again.
Okay, sure.
It's visible for me. It's not lost, in fact. I think.
Yeah, Seshadri, actually, I think your side is fine. All participants, please click on Seshadri's name on the participants list, which has a presentation in the braces. If you click on that and you click on the pin, it will stay.
Yeah, exactly.
Yeah.
All right, so let me continue with what I was talking about on the inventory side. What I was saying is sell whatever you can at this point of time, and especially after the market opens. Don't worry about the prices, whether you make a small loss or not. The idea is that you should convert it into cash quickly rather than hold the inventory and then wait for the demand to come up. But do revisit the plan based on your final business plan. We'll talk about more details in the later part. And the other area that is often neglected is cancelled orders and prospects which have walked away from your business. If that was the case, I mean, I know it will be rare, but there could be those cases. Just go back and see if you can renegotiate, especially if price was an issue at that point of time that made the prospect walk away. So these are some of the suggestions in the working capital area. The other thing, of course, you should look at is costs. And the first thing that you should look at, of course, is the general administration costs. Renegotiate prices. I mean, this is a crisis. Let's not waste the opportunity. So, like the saying goes, let's not waste any crisis. So, renegotiate your prices. I know of a few people who are asking for some months free from their landlord, and it's easier for the landlord also rather than have a client who doesn't pay for 3 months and then find another in the next new one, keep the property vacant for 6 months and find another one, negotiate a new contract and all that. Rather than that, ask for some months free. If that I mean, most landlords would be open, especially with the news how it has been. And coming to employees, you can ask for deferment of salary and offer something in return or minimal interest. And especially those cases start from the top. Top management to downwards. I mean, it's typically a case where somebody in the top management forgoes 1 week's salary that could pay for, say, 5, at the lowest level of the hierarchy. So those are the kind of trade-offs that you can think at this point of time. This is especially true also for startups, and you can think of negotiating, renegotiating option packages and stuff like that at this point of time. The other thing that you should definitely make use of are government schemes that are available, if it is available to you, especially EPF, ESI, and GST schemes, to name a few. And in the case of employees, avoid surprises. Always communicate. I mean, this is one critical relationship that you want to manage, especially if you are a startup or if you are in the services industry. And marketing cost. I know this might come as a strange surprise for you, but think of this as the last item that you need to cut. When you come out of this COVID-induced recession, you still want the market to remember you. So marketing should be one of the last thing that you should think about cutting. And of course, rationalize, negotiate for better deals. You can think about making your in-house employee into a consultant, things of that nature. But don't make it a zero line item at this point of time. So the next way to kind of release cash would be in the capacity side, space utilization. Of course, like I said, rented space. If you, other than renegotiating, you can look at reducing the usage of the space. If subletting is an option, or consolidating different facilities, do that at this point of time. And if it is your own space, reduce usage still, because there are still associated costs like AC need to be on or lights need to be on. So whatever savings you can find there, do that. And one other idea that I can throw at you is offer the space to your suppliers if they are willing and able to move at this point of time, because you are going to build a ecosystem, and this is only for your key suppliers. You will end up building an ecosystem around you, and you can offer different terms to them being their supplier. Being their customer to your supplier. So there are innovative ways of doing that. The other side of capacity is the manufacturing or your production capacity, whether it is your team or production team or production facility or combined. So if you have a product development team that is working on a long-term product, you can look at selling services from them. So that is one way. Typically startups bootstrap, sell services, and then use the downtime to do product development. So you have to go back to that mode. And of course, if you have a machinery and things of that nature, see if you can repurpose the machinery and your facility to produce products that are in high demand now. Especially if you have items, or if your capability to produce items like masks or sanitizers or similar kind of essential things that are in shortage, you have an opportunity there. And if you haven't looked at it so far, kindly do that in the next 1 week. So if you have server space, etc., you look at reselling that. Think of it like your normal office space. So if you have sunk cost in terms of large server space, that's what I'm referring to here. Now, how do we approach planning? I talked about this being an uncertainty, right? So how do we approach planning in these cases? So the idea here is that you typically, what I find with entrepreneurs and businessmen is that they'll have one plan and they'll go with that. So here the approach should be that you plan for different scenarios, and that's why I have these two favorite quotes here. One from Eisenhower, who led Allied forces in the World War II. His saying is that plan is nothing, planning is everything. So what he means by that, if you have one single plan, that is nothing, because the first moment you come in contact with the enemy, you have to throw it in the garbage can. because you then have to react to what the enemy is doing, and then it goes on from there. The other way of saying it is that everybody has a plan until they get punched in the face. So that's what Mike Tyson says about facing the opponent. So with these two things in mind, we approach the planning part of it. I mean, it's very difficult to plan. I agree, but I mean, failing to plan is basically planning to fail. So in this situation, when you plan, remember a few things. One is that there is no holy cows anymore in your plan. So you are emotionally attached to some things. I mean, it's very evident with a lot of entrepreneurs. Their business is their passion. Their profession is their passion. So the advice I have to give you, I know it's hard to accept, is that there are no holy cows. The plan should be to survive and not hold on to your favorites at this point of time. And like I said, it's difficult to plan, so the idea should be that demand might be there, might not be there. So plan for zero demand for a quarter, half year, and 1 year ahead. What will you do if your product doesn't sell for next quarter, next half year, and next 1 year? So that should be where you should start, and then do gradation of planning. And don't forget, demand might come back, and demand might come back in a big way as well. So you should also plan for that, because you should also look at different. I mean, so I've just thrown some numbers here just to make the case clearer. So the idea is that you should plan for all levels and be prepared for those. And the next 7 days is actually good to do this kind of an exercise. So like I said, demand may come back or may not come back in the next whatever time frame you're looking at, but expect the worst and be prepared and hope for the best. The other thing that you have to clearly keep in mind is that it's what is worse than having unsold inventory in your hand is turning away your customers without fulfilling their orders. So that's the other reason I'm saying plan for 150% of your last month's demand, because there could be cases, depending on your industry or sector, where last 3 weeks or so you haven't fulfilled their demands, and the pent-up demand may come and hit you. So that is one of those examples that I can give you there. And the other key thing that I should advise is scan your external environment. And I see this a lot with smaller businessmen. They are confident about their business, their abilities, but that doesn't translate into the market realities a lot of times. So it's very important that you keep scanning your external environment, so to speak. And simpler ways to do that is like going back to our first slide about making connections, keeping connections intact, is talk to your suppliers, customers, and of course your employees like salesmen who should be keeping in touch with the customers. And that should give you good insight on what your competitor is doing, what is the upstream demand patterns. I mean, like I said, is there a pent-up demand that is going to come and hit you? That those indications are available there. Finally, one word of caution: ignore newspaper headlines. By the time a reporter reports, even if it is in a financial newspaper, I mean, it's not even worth reading, especially these days with clickbait type of news that you see in all newspapers and fake news. It's worth ignoring that at this point of time, especially when you're talking about planning for your demand. Rather, I would say look for classifieds, RFPs, and job ads. These would give you much better indication than what the newspaper is talking about. And now coming on to startups, especially the pre-revenue startups. the I mean, you haven't built anything to your customer, or you are now in the bootstrap phase. I mean, there is some amount of more bad news for you, but it's not that bad. So at this point of time, your focus should be on survival and not scaling up or building big products. Conserve cash again. Conserve cash and stop your cash burn. Go lean. So that should be your approach at this point of time. And this lot of VCs and angels will tend to agree, and this is a common theme across the last week's calls that I've been part of. Everyone talks about this. Everyone gives the same advice to startups. And if you're in a development cycle where you're developing a large product to be rolled out 1 year ahead, decelerate that development cycle, revisit again, come back to conserving cash, and try to go lean, try to find a MVP, minimum viable product, and then go from there. But at the same time, have plans to accelerate, because a lot of startups may find interest quickly, depending on what they are offering. So that's also one thing that you should have in the back burner. But the focus should be on decelerating and conserving cash again. The other option is you would have probably, most startups would have done this at different point of time, but make your employees who are in the development cycle billable as consultants. Take ad hoc projects, bid for them, use platforms like Upwork or TopTal or Fiverr or whatever that is, where you can find a business. Go do that, bill from the company, share the profits with the employee if need be, and then move on from there. And keep searching for funding sources. Don't stop the search, but I mean, the view is so far not discouraging, but the trend I have seen in the past says that you may have to wait for some point of time. So don't expect first round of funding in 9 to 12 months. And if you're in conversation with somebody, you started your pitch, expect that to go on for 9 to 12 months. So the normal cycle of evaluation is from 3 to 6 months. So that means that you should be ready to survive for 15 to 18 months without any additional funding coming from an investor. So it's a tough time, but that's why coming back again, conserve cash advice is important. And for committed sources, talk to them, confirm whether they are still the funds are still available, and stay connected, update them about how you are progressing, and most of the funds will come through, because like I said, it's uncertainty. So once the uncertainty is removed in the next month or so, the committed source of funds will still come, if it is VC or angel. The other thing that I mean, it's difficult to think for a startup, but if you have developed an IP, think about selling ownership in that part of it to larger companies, your customers, somebody in the downstream industry, and keep part of your ownership. It could be the form of royalty agreements or licensing it, the IP. So that also should be one option that you should keep in mind. So this is one thing that in fact saved the tech company I was working for, because we had an IP to sell at that time, and one of our customers was after us for the IP for a long time. So we made a deal quickly to sell the IP, and that put us enough, got us enough money to fund our payroll at that time for about 3 to 4 months. So this is something that you should think about. It may not come to you easily if you're a developing IP for the first time. So that's why I have it here. And if you have tried all of these and still your business plan is not working, one quick word of advice to you is hope is not a strategy. The idea of a startup is also that you should fail fast. So this crisis is an easy excuse without affecting your confidence as a entrepreneur or a startup guy. You can easily exit and learn the right lessons and move on. This is only applicable if you have tried all the other doors and you still don't find any solutions. So if you are at this point of time, at this stage of if, of your business, don't hesitate to take this call. Take your time, but if this is the decision that you are coming up with, do that quickly and then move on to do your next venture. So that's a quick advice I can give you there. And what is the funding scenario? What is likely to be in the next year? So far, I haven't heard anyone pulling funding yet, but these are the early days. So in all the calls with there were VCs are there or angels are there, they are still talking about additional funding, different modes of funding. That all the committed funds are still going to the investee companies. But one word of caution is that all of the investors are also under stress because of what is happening in the public equity markets. So their investments, which are more liquid, are probably suffering. So that might affect their funding ability. So keep that in mind. With that, your funding priority should be first, of course, internal savings. Look at your personal finance, restructure it if you can, and find savings there and bring it into the business. And for startups and the newer type of new age businesses, grants, hackathons, and challenges, etc., should be your next obvious choice. There are a lot of bank and SIDBI funding that is targeted at this crisis, especially for startups and small businesses. So that should be your third choice. Debts and finally equity. And word of advice for debt is that don't forget. I know you could have been in the mindset of I won't leverage this business, I won't take debt. But to take debt and start leveraging, the time is now. And look at venture debt, convertibles, and debt with equity kicker. So SIDBI has a scheme out there for startups with, larger startups where this could be an option. Talking about equity, at this point, valuations don't matter, survival does. So remember the Paytm story that would have been repeated so many times. So the key thing to remember is you can have 100% of nothing or 10% of something. What would you rather prefer? And revisit asks in the sense what you are willing to give up to an investor, be willing to give up more equity at this point of time. We, as a valuer, I'm seeing a lot more saner or expecting a lot more saner valuations, rational look at valuations because of this crisis. There was a little bit of a bubble, if you will, in terms of valuation in certain sectors, but that is essentially gone now. And valuations haven't started dropping yet, but it has come back to a normal side of stage at this point of time. So with that, my most of my sort of advice part is over, and before we move on to the question answer session, One key thing I want you to remember, and it's also a coincidence that we are doing this webinar in between a Good Friday and Easter. So just I will leave you with that optimism that the businesses like the Messiah will also resurrect when it's just a matter of time. So with that, I think we can move over to question and answers. Um, Over to you, Roy and Nisha.
Yeah, thank you, Seshadri. It's a wonderful insights and the optimism you have contributed that there is a resurrection, and soon we'll open this forum for discussions. Please. Yeah. And, Amit, yes, sure, Amit. Yeah.
Yeah. Hi, Seshadri. Am I audible? Hello.
Yeah, I can hear you.
Yeah, Seshadri. So we discussed in to brief what would the preventive steps right now to survive, basically go in a survival mode and expansion mode. But as you mentioned, historically, if you see, this trend is repeating every 10 years around of time, right? Means means the ideal business cycle.
Right.
So, and right, as you know, right now you mentioned the liquid cash is the king. Okay, but this goes against that typical and traditional financial model. Like you need to reinvest your savings. So I was thinking,
Right.
is there a way? Is there a way, or is there a model that could be thought around? Like since we know, like every 10 years this market goes down, business cyclic in a sinusoidal mode. So should the cash expenditure or cash cushion should also be propagated in the same fashion rather than reinvestment, focusing on reinvestment, just against the classical theory of investment I'm just thinking about.
Yeah, that's actually a good question. It's coming from the personal finance side, I would say, rather than how a business should think. And there are actually investors who think like that. So to name a few, there is Seth Klarman, who's famous value investor. He holds cash, like you said. His cash deployment actually went through the roof in the last month or so. Same thing with there is a fund that Taleb advises, the author of Black Swan. They do the same thing. They keep cash and they deploy it when the crisis started, and their last month's return has been phenomenal. And the other sort of personal anecdote I can share with you is I manage money for some of my friends and family, and I've been doing the same thing in a sort of it's not as aggressive as the other investors I talked to you about, but I've been doing the same thing there. I mean, 30% in equity and 70% mostly in debt funds and liquid funds, and suddenly it turned the other way around by end of March. And all the investors or my friends and family who have been complaining about why I'm not chasing return are now saying that I have enough foresight. So, so what you said is absolutely right, but that is more from how you manage your personal money and savings rather than how a business should look at cash conservation. So, for a business, it's more about diluting less of their equity and taking part in the future profits when the when the cycle turns. So the approach is that you cannot actually predict this as a 10-year cycle. It's very tough to do that. But still, what applies to personal finance doesn't necessarily apply to corporate or business finance. So let me leave you that
Yeah, yeah,
Thank
and
you.
yeah,
But
and
that was an excellent question, though.
okay, thanks, Shadi. And second thing is like just we discussed like right now, if possible, the business should diversify their current production plan towards the essentials that's required at this time of crisis, less mask and sanitizer and etc. Okay, that's what
Right.
like I Gucci and everything did. But the point
Yeah.
is, for a small scale industry, even if it is possible to diversify towards the new product lines, by the time they hit the market, is the possibility that the consumption and the demand is the same. I mean, that's again going to have the inventory carrying cost.
Oh,
So
yeah. Yeah, absolutely. Absolutely. And I'm not talking about having a plan to turn it around. This is more about getting your essential material license from your DIC or industry minister and then starting it right away. So you don't have
okay,
to wait 7 days to do that. And I know a lot of my friends have already done that. So,
okay.
I mean, the masks and sanitizers. So.
Okay, and the last one, Shashadri, is like from the immunity perspective, like if I'm having a startup, so what should be the necessary precaution I should take that in future if something similar happens, I could be able to minimize the impact because what's happened is happened, but we
Um,
can plan for future.
yeah, right. So it's interesting you should bring this up. I mean, it's not something that you can plan for. I mean, these things keep happening, especially if you look at Kerala. Last 3 years has been tough. Two floods and now this. So. But the reason I said it is interesting is because I was listening to one old video of Buffett and Bill Gates addressing University of Washington students together, and the part where Bill Gates was talking about that I found interesting because I was preparing for this presentation was that he always they started. I mean, they were a startup right before startups term came in fashion. Then he started hiring friends. What he says is he always kept 1 year salary as in the bank in cash essentially without investing it anywhere. So he would sell products, the cash would sit there even if when he had large customers who went, I mean, he saw them going bankrupt and all that. So he didn't want people who depended on salary to remain I mean go on unemployed, and especially because they are friends. So this is one strategy he adopted. I mean, I don't recommend it for everyone. It might not work with everyone's mindset, but even these larger investors, successful businessmen have done this in the past. So that could be something that you could look at. This my suggestion if you are in the services business.
Yeah, sure, Shadri. Thanks a lot for the insight. Yeah.
Hello, Ansha.
Yeah, am I audible?
Yes,
Yeah.
sure.
Okay. I'm from the EPGB 10 batch. So my question was, we were actually planning for a startup for the last 1 year, and in the final stages of our product development, that is when this happened. So I am curious about, will there be any large-scale behavioral change in people which we can expect, or is the customers going to be the same after this crisis is over? Especially when it comes to retail, where coming into a common physical place is important. Or can we take examples from any previous crisis to actually predict it?
And what type of a startup are you, or what is your
We
target
we were looking at a fitness-based startup, but it's not an online kind of thing. It was actually a physical place. So again, I am worried about the social distancing stigma and all, whether it will remain with people after this is over. Also, I mean,
so the social distancing might stay, but it may not stay the way it has been in the last 2 weeks or for the next 7 days. How it would probably be a different character, and I don't think people will stop going out hugging people or whatever that might be. I mean, we are a social animal, right? So I don't see that happening. I think one of the surprises could be that you probably are going to see a lot more demand from local customers in terms of travel and food. Reason I say travel is because, of course, you might be apprehensive of traveling to a new place and being stuck there. But if it is something like a 2-hour travel from your location, 21 days, on the 22nd day, a lot of people might be planning this, even though that's not a right thing to do. But eventually, in the next 1 month, you will see that travel happening. And food, of course, we have been all eating home cooked meal, and so you may want some break from that. So local eateries also might benefit from that. So in those ways, demand will surprise us. So that's why I said I had this thing about don't try to predict demand. Just be prepared for different levels. Hope that answers your question.
Yeah. Actually, is this crisis comparable to any earlier ones which happened? Because for me, this kind of seems a little too much.
Yeah, so this is actually new. So especially, I don't think anyone in our generation would have seen this.
Okay.
Because the last time anything similar happened worldwide is probably the 1918, the Spanish flu. And there aren't enough people to remember that, or even the recession of the 30s. So probably this is something that everyone is experiencing their lifetime for the first time. So, and advances actually probably make it a lot more different, because we are now used to a lot of things that like travel is faster for us than what it was those days. So those things also will affect us differently. So even if somebody has experienced this before, they are not a good guide, because the backdrop is different, right? So
okay, thank you. Excellent presentation.
Yeah. Yeah, Seshadri, if this is Amit again. So just want to add one thing over here. First of all, hey Ansha, good to see you, man. Yeah. So
Good to see you too.
yeah. So actually, I was going through interview of Raghuram Rajan yesterday, and there was a statement which he made, and that was actually very intriguing. It was say like post this COVID-19 is over, the psychological behavior change in the consumerism is right now, which is very unpredictable, as you said, because for example, people might be very inclined towards sustainable things, doing the things, and that might decline a lot of consumer product demand. On the contrary, it's possible, like for example, people don't want to do most of the things on sharing basis, like Ola, Uber. So the production of product demand of automobile might go up. So right now it's very unpredictable. So the best thing would be, like if you're going for the startup, it is, if it is possible, having a remarket survey would be a nice thing to do. That I would suggest. That's my opinion.
Yeah. So that's one thing I was saying about scan your external environment, right? So like you said, I'm also hearing the same thing about Ola, Uber, especially the pool model. That is probably not going to work for another 3-4 months at least, if not longer. So that is very clear, very evident for a lot of VCs out there. So I mean, it affects a lot of startups which are counting on advertisement on cabs and of that nature. So that model will have to be reevaluated. So, I mean, best thing is for all of us, this is new. So behavioral changes also are going to be something that is unpredictable.
Yeah,
so.
Yes. Yes, thank you. Georgie, you want, please, you want to ask? Hello, Georgie? Hello, Georgie? Hello? Oh, I think, yeah. So just, I think Georgie wanted to ask something, and I think he's not online.
He's saying he's muted.
He's muted.
Georgie says he's
Yes.
muted.
Oh, okay. Georgie, just a second.
Can we take another question in that time? There was a question posted by Babu.
Okay.
Is it the right time to scout for fresh investments? Seshadri, there seems to be some problem from the voice from your side.
No, there was some background noise issue. I think.
Okay.
So the regarding scouting for new investments, if you are, I mean, if you have, and I'm being very cautious here, if your financial situation is secure, and either you don't have any debt or you have debt but you have clear visibility on where the funding is coming from to fund that debt, whether it's housing loan or whatever, for the next 1 year or a little bit more than that, this is a great time to look for investments. Only that is the question I would add at this point of time. So just to talk about what I am doing, I am actually looking at, I mean, as you, Roy would have mentioned in the introduction, I'm an angel investor. So I'm looking at startups more aggressively. I'm looking at accelerating my investment plan there. Like I said about stock market investments, including my clients, we have gone the other way, but we are still cautious. The 30% is still there because market might dip on another set of news next 1 month or 2 months or whatever it may be. Recession might be longer. So those kind of things is why I have that 30% dry powder, so to speak. But clearly this is a good time to look for investments, but steer clear of certain sectors like commercial real estate, travel at this point of time before there is a little bit more visibility. So there are certain sectors that like that you need to be, stay away from at this point. But other than that, a good time to look for new investments.
Yeah, well, fine. Yeah, Georgie, if you still want to ask something, please.
Oh, yeah. Am I audible right now?
All right. Yes, please.
Yes. So sorry about that, because I was a little confused with the app. So what I wanted to ask was, I work in the outdoor media space. I have an outdoor media agency out of Cochin. So I have billboards across Kerala.
Right.
So I was wondering, so you were talking about how people should ideally push to marketing so that people do not forget about the brand.
Right.
So I was just wondering if big brands are actually push towards digital more, or do you think is there a possibility that they would go for more traditional marketing or advertising tools?
So the categorization is wrong in my opinion. The way I think about it is whether you can demonstrate your ROI in the first place. The second place is your ROI better than other media? So those are the two considerations that should go into deciding between whether it should be outdoor media like you are talking about or digital media. And I would think there will be an inclination towards digital media more just because of the way this is superior in terms of capturing the eyeballs in a decently good way, even though Facebook has its fake account problems and all that. And demonstrating ROI, they are fairly superior in that. So between these two, digital is going to win in a big way is what I think.
Exactly. No problem. Thank you.
Yeah. Hello.
Yeah, we have a question from Sini. For business-to-business service industry startup, what role model could be taken other than survival to what perspective could be for rising from stagnancy in B2B service? Sini, do you want to elaborate on the question?
Tini?
Or should I?
Am I audible? Am I audible?
Yes,
Yeah,
yes.
you're
Yeah,
up.
Siri. Yeah, I'm speaking. I actually have, I was planning to get into a startup business very soon and just fall into this COVID-19 thing. Actually, the business was service industry, business to business. It was basically based on a photography. So since that seems to be very away from an essential things, and currently that startup is just surviving, paying off the money to their employees, but was wondering about what could be the perspective of that rising from COVID-19. Like they were actually serving to brand, and now that brand is like has put up a stop for like 90 days, and after that they would be resuming it. So on an ethical basis, this vendor is not sacking off the employees, but yes, they are surviving on. So I was wondering about that, what could be the good role model that this vendor could be taking for the perspective of growing the business, and what could be the scale or the rise of the business if this is a structure model of what this is surviving on a business.
Um, yeah, sure. So thank you, Sini. So I think now it's clear. So the real question I would start by asking is
Yes.
how strong is their relation with that particular customer? Because when you have one, two customers and a B2B service, everything that matters is how strong is that relationship, and who is your kind of internal champion in that organization,
Okay.
in that customer's place, and it will all revolve around that rather than whether your whether your product is great or whatnot. But that has been my experience. So it could be, it could be different in a lot of cases, but still, these two factors matter a lot. Coming back to what I was saying about relationship building, so this is a time to keep that relationship alive if you are in that role, and and you can only move from there rather than you can only wait for that customer to take that decision and then move from there. But you still have options, right? If you are still talking about photography type of business, you can always pivot into other areas or provide service if that is an option available. So those are some things that you could look at, but that is something contingent on what the customer is going to do, right? But so this should be some part of your planning, is what I would advise.
Okay. Okay. Thank you, Seshadri. Thanks.
Okay. We have a question from Narjesh. What is the possibilities and scope of a business which using skills of lockdown people?
Natish, may want to elaborate on that a bit?
Yeah, nowadays lot of us are, or most of us are in lockdown. They are in home. So, if there is any possibilities or any scope for using such people different skills and making a business model.
Okay.
So I'll start answering the question, but if somebody has a better idea, please feel free to jump in after I finish. Two things that I've seen is, one is the mask making, right? People who have been sitting idle, especially homemakers, have put that skill to use to make masks, even as volunteers. We have done that with through some of the Rotary clubs, through one of the NGOs that I was working with, where they were doing bags and cloth bags and stuff of that nature. That is one option. And second is, if you are in the digital space, this is a good time to get people's attention to your Facebook pages or whatnot by running engaging campaigns. So it could be, giving them, tasks, or that they can post back into your page or something of that nature, and you essentially get your traffic to the page up. So that could be the second model, and I think these are the two models that I've seen that have been running in the last 14 days or so. But I haven't been able to pay much attention because of a lot of other things going on with my thing. So that's why I said if there is somebody else who has a different thought about it, they should pitch in now.
Nadish, I think your question was based on maybe personal experience where you run a factory and people are not able to come for a job, and it is not a job that can be undertaken from home. Is that?
Yes, if we can successfully implement this kind of model, we can continue after the lockdown period also, especially for non-working women like that. In the normal skills, but also a very high-level skill also we can work from home.
Yeah, it is true, and I think that that's a wonderful insight, because now the people's inclination towards work from home will change after this, or their attitude or perception will change a lot, and more and more people who are otherwise not using their skills will come to the forefront. I think in that way. Right. Hari Krishnan, Hari, you want to make some question? You want to ask something? Hari? Hello? Okay, right. Okay, right. Yeah, any question we have? Any more questions we have?
Hey, if I just may add something too, I think Sumi had asked something about photography, right?
Yeah, sure.
Hello, am I audible now?
Hello, please.
Yeah.
Yes, please. Please
I think Sumi was talking about photography, right? Where she wanted to do a startup of photography. I recently saw a post on InShop where the demand for photographers or wedding planners had gone up in China after the lockdown is passed by, because there were a lot of marriages happening there. So like how Seshadri was talking about moving into a different place, there is, I think, a good amount of demand once the lockdown period is done, where people have put off marriages and all of those functions.
Yeah. Thanks a lot for adding this. I was actually heading towards this plan only for adding to the basic or cash cow business as well. So
exactly.
Yes, yeah. Thanks.
Yeah. While others coming in, Seshadri, I have a question. Now the SME sector altogether has the sales have come down 30%, and it's going to suffer a lot. Now just now there is a news that the lockdown is going to extend for of course in a different manner for 2 more weeks. What kind of support measures will make the SME industry survive this crisis? Government support side.
So, see, these are early days. I mean, in my opinion. Different industries are going to take different paths. So the support measure essentially has to be tailor-made for each of them. And the other thing that complicates this is that level of capex is different for different sectors. Level of employment is different. The type of employment is different. Some have contract labor. Some are more towards permanent labor. So that and all makes this a little bit more complicated. So solution from a public policy point of view, it has to come from the individual sector, industry, ministries, or sector bodies that govern them. But the initial steps are good in terms of this GST holiday that is there, and the small or lower interest for late payment of income tax. So those kind of things, plus the EPF contribution, employer contribution and employee contribution coming out of government's hands. Those are very low-hanging fruits that they've already taken care of. So the next part is clearly about this, and coming back to what we were discussing the last call, the critical thing I think now is to take care of the harvest season for a lot of important crops like wheat and pulses, because that is heavily dependent on migrant labor, and a lot of reports are coming in saying that if the harvest doesn't happen soon, crop losses will be there, and that has a lot of cascading effects the way our economy is, because I mean, a lot of in terms of number, it's more like 2/3 or close to that are dependent on agriculture and related industry. So to prevent that cascading effect, that is where intervention is needed immediately, I would say.
Yes. And even the farmers have started selling onions at 3 rupees, where the investment is 6 rupees. From Nasik,
exactly. And just look at pineapple. Just because movement across the border, state borders have been interrupted. I mean, we are getting it at 20 rupee a kilo and all that, right? Yeah, or less than that, right?
Yes. Okay, fine. I think we have 2 more questions coming in from Madam and Seshadri, Rakesh and Suresh. Madam, can you just put across the question? Hello? I think so. Hello, the question was this: is there any chance for startups coming together to share resources so as to keep costs down, space employees as consultants? That was the question.
So startups pooling their resources is a possibility, but I don't see that as a cost measure, because I mean, most startups anyway operate on a very bare bones kind of cost structure. If they are not, they should be. But that's more of a how you address customer requirement type of solution rather than addressing a cost side. But that's definitely a solution, because cooperation rather than competition is the way forward for especially for startups and smaller businesses. So pooling resources and developing jointly products, that's definitely a good idea.
Okay. Thank you. We'll take one more question from last question from Suresh. Suresh?
Yes, Suresh this side. Am I audible?
Yes, please.
Okay, my question was typically that because of these situations, people are looking at more of work from home, online kind of an interaction, all that. So will there be something like the startups which are going to come in would be more looking at those kind of working procedures, or will the world look at more of online work from home to be the normal thing, which is not there right now, which is not very predominant? So will you actually predict that startups are going to come in from a technology perspective, offering platforms which can give more of business run on online platforms as well on work from home kind of a model?
Yes, Suresh, I think I mean, platforms coming in from a work from home model may not be that much of a big deal, but definitely work from home is going to be more prevalent. I mean, it's more likely, I would put it. It's not a definite because can still go back to old ways for larger companies. But the critical issue, I mean, I think you would have faced the same thing. I am facing it today even when I'm presenting, is that bandwidth is a big problem, right? Even if you want to do work from home, when everyone does that together. I live in a 9-house villa complex where all of the house has somebody working in Info Park, and all of them are working from home using almost the same cable internet connection. So I can't get into that connection. So I'm using two mobile broadband connections. But then there are issues with that. So the real issues on the back end infrastructure rather than this, plus the mindset of managers. But one good thing I brought up in one of our groups, alumni groups, was that if there is an organized study around productivity during this lockdown, it's a large-scale experiment of how people behave and what the productivity levels are from working from home versus working from office together. This is a very large-scale experiment that you can use to conclude brilliantly on that. Probably an HBR or MIT SMR will come up with that kind of an insight soon. Let's wait for that, and let's wait for the larger corporates to change their mind on having people working from home. Smaller companies, they don't care really. I mean, startups and startups really don't care. Smaller businesses care or not care based on what the manager or the owner, what their preferences are. So it's a, I mean, and like I said, the change would rather be from the other side. But coming back to tools, that the specific question you raised, I think there are enough tools. Plus, there is also the question of credibility and cyber security issues. So even Zoom had issues, even though that was the first to be adopted. Unless you can solve those kind of problems plus security issues, it's very tough to break that market as a startup.
Okay, so typically you mean that there has to be a cultural shift in terms of companies looking at or probably adopting work from home or remote work as a medium of work culture, right? It's a cultural shift that you're probably that should be coming.
Yeah, cultural shift, and more on our side of the ocean than developed markets, because I see a lot of people who work mostly from home in the US and UK markets and go to office once a week. I've seen a few people do that here, but it's mostly manager habits rather than anything that is stopping this.
Okay.
Sure. Yeah. Thanks so much. Thanks for your reply. Thanks so much.
Yeah, thank you, Seshadri. And one final talk by Anand Narayanan. Anandan, hi. Hello, Anand Narayanan, please.
Hello.
Yeah.
Yeah, thank you very much, and it was a very insightful discussion, and I wish to make some points. I will focus more on finance side only, because the point of discussion today is more focused on finance side. The presenter was actually talking about the cash is the king, a very insightful point, and it's actually something which is a very detailed thing to be discussed. And what I would perceive at this point of time is to rather redefine the cash as something like a workable fund. Because when we talk in terms of the bankers' perspective, we are rather see the moment how the funds are moving from one side to the other. And for that matter, in banker we have something called TOL by TNW. which usually we used to have a leveraging of somewhere around 5 as an indicative or something like which is a desirable option. But at this point of time, as Seshadri was telling about, to have more infusion capital, it will be ideal to bring it down to a very comfortable level, so that the leveraging will have a negative leveraging will have a better impact on the profitability and cushion. So each business, I think, he was very detailed about this discount pricing, reinvest based on the business plans, etc. So sanguine with that, I would say that each business has to rather revisit his working capital cycle, and rather he should evaluate and classify a proper current asset position. Because this is very important for one thing, that the high stretching of working capital cycle or at a low margin products will lead to a stress, and further leveraging will rather result into more problems. So I think this assessment, a self-assessment on the working capital, the current asset position, and he has to carve out his non-current assets, and then go for a discount pricing, price reduction, or rather he can see for a refinement of the existing assets with more value for money deals. So that is also like pineapple, somebody was mentioning, like profit. So these are some points, I think, which I would add in terms of the finance side. And
thank you.
So any bankers are offering a lot of stimulus packages. SIDBI, they are offering good packages for the startups. Venture funding is available, but at this point of time, people should view with some caution on any sort of financial packages, because nothing is given at free. Everything has to come back as far as the banker is concerned. So any financial leverage or staggering of liability can only be sorted in case of a viable option. Otherwise, as the presenter was mentioning, a fail fast maybe something which has to be viewed in that way. So with these few words, I remain. Thank you.
Okay. Thank you, Anandanarayanan, and then brought a banker's perspective. And I think, Seshadri, we will just wind up today. This was anything to add? This was a wonderful session, and we had a great participation for 1.5 hours. Thank you, Seshadri, for the very wonderful presentation as well as the insights during the deliberations. Thank you very much for joining, and we will keep in touch. And thank you everyone for joining with us today from the side of from IIMK Alumni Association Kochi chapter, as well as from Consoul Associates. Thank you very much. Thank you, Seshadri.
Thank you, Roy, for having me. Thank you very much.
Okay, so yeah. Thank you very much, all of you.
Thank you.
Bye.
Thank you.
Okay. Thank you. Bye.
Thank you.
Manu?